Hey everyone, stick with the us versus herd. If it's your first time here to the content, hit subscribe. If you want to get notifications from when we post videos, tap the bell. And if you want to join the UVH fam, our community, links are below in the description to our Discord and our options trading group on Facebook. If you are here right now, comment below, ready to learn, say what up, let me know. Hit the like button for the YouTube algo. Let's get into it. Today I'm going to show you how to make or how to calculate $100 a day profits, how to make $100 a day profits on Robinhood. Right now I am sitting all cash. Robinhood is not my main broker. I do use Tastyworks and some other brokers to execute my trades. But for Robinhood, I get a lot of questions about making money on Robinhood, and that's why I'm making this video. There's a lot of people trading options on Robinhood. So kind of getting into it, I'm going to go into SPY just because it's the most flexible for a lot of different price points. And on top of that, there's a lot of different expirations and a lot of flexibility there. So I'm going to go to SPY right now. I'm going to go to trade options. And what I want to kind of talk about first is, how to pick a strike, and this is kind of where you're getting at and how to calculate that. Now, Robinhood does its best to kind of keep it simple and hide things from you in terms of what the option pricing or what the strike price is actually doing. But if you let's say I just click on the 320 call, right? There is some more information here, and this information, I don't know why they hide it. It's super important. I know people get used to the way it looks right here, but the main thing that I want to talk about today is delta. Delta right down in here is how much is the stock going, or how much is this contract going to make or lose per every dollar the stock is going to go up or down. So let's say for SPY, if I buy this 320 call, I'm going to get a delta of 18, okay? So that means if SPY goes up $1 from where it's at right now, so right now it's trading, I don't know if you can see, yeah, you can see that, 315.96. If it goes to 316.96, I'm going to be making $18. Where a lot of people start losing money is not knowing what these numbers are, what they do, and trying to figure out, oh, I think I should be up way more money than this. SPY move $2, I should be up more money. But if you bought something for 18 delta and you buy one of them and moves $1, you're gonna make $18. Now, where it kind of gets tricky, as you kind of go closer to in the money here, let's go to the 319. 319 for every dollar, right now delta's 25. So for every dollar, I'm going to make 25 cents per every contract I have. Okay. So if you're trying to calculate this out, oh, I want to make $50 a day or $100 a day or $500 a day. This is how you determine risk. What do you think the stock is going to do? What do you think the ETF is going to do? And then how much do you need to risk to get there? And a lot of people, they mostly deem success by how much it is percentage wise, not necessarily how much it is money wise, not percentage wise. So to get to the raw data to figure out how much money you need to make, let's say for this example, I want to make $100 a day. I have a couple of options here. And I'm just going to use buying a call. You could do the same thing for a put, okay? Buying a call. Now, as I go in the money here, you can kind of see, okay, and this is for July 15th expiration, which I definitely don't recommend, but I might move this here. But you can kind of see how the Greeks change here. I'll go over that in a second when I go to a later expiration here. But if I buy an in the money call, you can see my delta right now is $57, okay? So people are like, oh, I don't want to buy such expensive options. I would rather buy far out of the money over here. Oh, okay, I want to pay the 2 cents. Okay, but if SPY moves up $1, you're going to make $1. And people are like, well, can't I just buy 100 of these and I'll make 50% of my money? Absolutely. Or 100% of my money, you can definitely do that. Well, if it goes from 2 cents and it's only up a penny, you only make 50%. But yes, definitely. However, for me, my strategy, I tend to go for the higher delta because it's just way easier to calculate. Okay. So for every dollar, if I buy this 315 call, now SPY's moving up, right? If I buy this, as you can see, SPY's moving up. Now it's worth 59 delta. So if I buy one 315 call, it moves up $1, I'm going to make $59. And now if I say, okay, I want to make $100. Now I'm going to have to buy 2 of these. Okay, I'm going to have to buy 2 of these. Now, I don't like up in here, it doesn't show you what your total delta is. So you have to count, in In Robinhood, you have to do it all yourself. So if I go put in 2 here, right, and now it's 59. So for every dollar it goes up, I'm gonna make $59, and I have 2 of them. So that means 59. Now I have 2 deltas, or two contracts. Both have 59 delta. We'll just call it 60. So 2 of those, if it goes up $1, we're gonna make $120, and that's kind of how you calculate it. So you can kind of see, okay, I want to buy here. If it goes up $1, and I bought 2 of them, I'm gonna make $120. Sure, you can go more in the money if you want. You can get close to, like, if you go all the way down here, you can kind of see this is a 93 delta. So you only need to buy 1 of them. However, it's a lot more expensive. So at this point, you have to kind of calculate: is it better to buy the 306 call, or is it better to buy the 315 call and buy a couple of them? So if I buy 2 of these, it's going to cost me, if I buy 2 of these, it's going to cost me, $560 versus buying 1 of these for 90 delta, and I get more delta. So I get 60 delta times 2, 120 delta. Okay. Now, if I go down here, I buy the 306 that I was looking at for 93 cents, buy 1 of these, it's going to cost me, $1,000. It's going to cost me $1,047, right? So that's kind of how you calculate. Now, if you're thinking like, oh, how do I calculate spreads? Like spreads, I need to figure out how much money I'm going to make on spread. Okay, it's pretty straightforward. So let's say you want to do like an out of the money call debit spread. Okay, so I'm going to buy the one that's closer to in the money, and then for this is all example purposes. That are not real trades. I'm just kind of showing you the pricing. Now you're saying, okay, I'm gonna sell one right out of the money here. So I bought the one closest to in the money, sold the one furthest away out of the money because I want this to go up. I'm buying a debit call spread, but you don't know, like, how much money am I gonna make off this thing? If SPY goes up $1, if it goes up $5, how much am I gonna make off this thing? Now on Robinhood, it's definitely a lot more tricky, right? It's because you're gonna have to calculate yourself. Now this is a 43 delta, okay? This is a 35 delta. So you want to subtract, let me get the calculator here. Now you want to subtract, okay? Pull this over here. This the long delta from the short delta, right? Or the short delta from the long delta. You want to subtract the short delta from the long delta. So right now, we're just going to put in 44 minus the 35 right here, as you can see. So for every $1 that's going to go up, I'm going to make $9. That's how you calculate it. So for every $1, I'm going to make $9. Now you're like, I don't want to make, I want to make a lot more money than that. Then you're going to have to determine what risk you want to do. Do you want to do naked calls? You want to do something further out? You want to be more in the money, further out of the money, tally up. You want to add on the more contracts. I mean, what do you want to do? And now you can kind of see. I really don't like that they don't show you what it is here, but if I put it in here, this is going to cost you $46. This is going to cost you $46. However, you're only going to have 9 delta. So if it goes up $1, you're going to make $9. Not great, right? Now, let me close this out. So what's it worth to you? What do you want to do? Do you want to buy a debit spread like that and be $9, or do you want to have maybe a little bit wider range? So let's say I bought this. Let me buy the 317. And sell let's go $5 wide, sell this call right here. So now I'm risking $1.43, but you're like, oh, I don't know, how much is that going to be? Okay. So again, you're going to subtract this delta from this delta. So now, again, we're going to go with the 44 delta. 44 minus, what was this delta up here? 9 cents. So minus 9. So this is going to be 35 delta. So you're risking more money, widen it up. However, for every $1 it goes up, you're going to make $35. Okay, and that's how you kind of calculate a debit spread, is you subtract the short delta from the long delta. So this is long delta, this is a short delta, and the same thing is for the put side too. Okay, same thing. However, they're negative numbers, but it's the same exact thing. Okay. Now, if you go further, let's go back to the call side. Just make it a little bit easier for people to understand. Let's go further out. You can kind of play with these numbers, how the delta changes from further expiration. So let's say I want to go out to July 31st. Okay. You can kind of see now the 317 is going for 49 delta. This is going 52. So you get less delta. So the thing is, the closer to expiration you are and closer to the money, the higher the delta. However, the more volatility, the more theta, things are going to really eat into that. So it kind of offsets it. But this is kind of how you can calculate. If you want to play further out of the money and further expiration, this is a safe way to do it. You can still capture, buying the 316 call right now, I can still capture 52 delta. Sure, I'm not going to get as much, but if this goes against me, on the closer expiration on the July 15th, I was getting the 59 delta. Now I'm only getting 52 delta. However, I have a lot more time. If things go against me, I have things to work out. However, you're going to be paying a much bigger premium. As you can see here, this is $7 now. So it's going to cost $7 if it goes up. If it goes up $700, if it goes up $1, you're going to be making $52. But this is how you calculate. This is how you start identify what option pricing is, the power of option pricing is, and how much risk to take on. Okay, so if you want to trade SPY, say I was going to buy the dip here. Let's say I was going to buy the dip here, the 314.61, and I go into here, and I wanted to buy the at the money right here, and I want to make $100. This is gonna. If I bought two of these, I'm only going to make $90. How am I going to make $90? It's because $45 times 2. 45 times 2 is 90. So I'm going to come up short if I want to make $100. So I have to buy 3 of these, or I have to buy 2 of these. So 2 of these, 53 delta. Okay. So I'm going to make $106 per dollar this goes up. It's going to cost me $4.34. So you can kind of play with the expirations, play with the amount of risk, but that's how you calculate, and that's how you can figure out how you want to make $100 a day, $50 a day. If you only want to make $50 a day, go down. It's going to cost you $217, $50 a day goal. SPY goes up $1, capture your profits, good to go. Now, if it goes against you, the opposite direction, if it goes down $1, you're still going to lose the same delta. You're going to lose $53, okay? So if the contract cost, let's just say $2, if it costs $2, it goes and it has a 53 delta or 50 delta, it's going to go, if it goes against you $1, you're going to go down to $1.50. So this is going to go from $2 down to $1.50. So the same way you make money is the same way you lose money in terms of delta. Now there's other things, but if you're day trading, that's the easiest way to kind of explain it, to kind of show you how to make money using delta and understanding how many contracts you need, what strike to pick, and that will definitely help you out in managing your risk. So if this helped you, leave me a comment below. Comment this helped. Let me know if you have any questions. Let me know in the comments. As always, stay safe, stay green. It's us versus herd.